Okay, folks, welcome to the week ahead commentary. This is where we review the closing price action of the major averages, and what a Friday it was. So I'm recording this after the bell on Friday. I'll edit it early on Saturday, hopefully to get this out to you as early as possible. I think the number one chart we need to focus on here is this one. It's the 10-year yield weekly view, and despite the jobs data, which came out on the headline, it looked bullish, but in reality, we saw an uptick in unemployment because or the unemployment rate, because more people are coming back into the workforce looking for jobs. A lot of people are saying that the headline was political. I'm not going to go there. I think that the fact that wages did not meet expectations was certainly a factor in why we saw a rally in equities. Now, the strange part is that the NASDAQ rallied very, very strong. At one point in time, it was negative along with the S&P 500. And for a few moments there, the Dow Jones as well. But it's all about the close, right? So the close was strong. We'll talk about the close in a moment. The question is, have we shifted from last night where I had a bearish tone? Is that bearish tone still valid? Or do we need to reevaluate the position that we have and say, okay, it's November, we're going into December, we have seasonality at our back. Do we need to get bullish? Okay. So with that, let's begin with the 10-year yield weekly view. Folks, this is a bull flag setup. This is a continuation breakout pattern. We did not go down today on that bad news. Yields held strong and they rallied into the close, daily view. So an inside bar, no new high, no new low. So this chart here, the weekly chart and the daily chart, they are giving us a clear and defined reason as to why we should be somewhat nervous about a continuation rally going into the next week. Because if we get a continuation rally on the 10-year yield, at a bare minimum, the tech stocks are going to suffer. That includes the mega cap tech stocks, Microsoft, etc. Now, moving on to the bond price. What was the quality of the close on the week? Horrible. Horrible. No change from last night. A bearish key reversal week. Daily view. First off, how was volume? Volume very heavy. Daily view. Bearish reversal bar on the day, continuation breakdown, bearish on bonds, therefore bullish on yields. Tips, they rallied back a little bit today, but we are still seeing a bear flag setup. The market is not overly confident that the Federal Reserve has dropped the ball on inflation and that they're going to pull back anytime soon. That certainly was not reflected in gold prices today. Really a huge, huge reversal day. So here's our update, hardly any conviction. So we're in wait and see mode on the tip market. I think it'll be interesting if we get a breakout here, along with a breakout in gold and silver and whatnot. Well, then that spells trouble for the Fed in terms of credibility. The dollar, weekly chart, bearish, I shouldn't say, excuse me, it's not a bearish reversal bar. It's a reversal bar. Yes, is it bearish? But a bearish reversal bar means that we closed red. A bearish key reversal bar would mean that we closed at the lows of the week. We're not quite there yet, so I don't want to be hyperbolic. This is a bearish chart. If you remember last night, the closing price on Thursday evening was right at this upper band of resistance. We appeared poised to have a huge weekly breakout. It didn't happen. I even warned last night the MACD was still quite negative, and a matter of fact, it went negative today. It was still positive as of last night. Daily view, bearish reversal bar. Looks like we are going lower. Volume rose. Now, what has me kind of stumped is if yields break out, well, why wouldn't the dollar break out? If you're telling me that the Eurozone is going to be raising rates equivalent to the United States, okay, maybe you have an argument there. As we're talking about that, let's meander over to first the Eurozone weekly chart. It certainly rallied back strong versus where we were last night, no doubt about it. Still a down week. You remember last night, we were down below this lower band of this bear flag setup. As for the yen, it managed to close the week out up, but still we have a lot of resistance above at 64.12. We can't count on the yen for any type of help until we get a close above 64. Let's say 64.25. Even at 65, you have resistance. So quite a bit of overhead supply above. So while the dollar looks bearish on the week, I'm not ready yet to go tossing in the towel on it completely. Not after yesterday's, or I should say Wednesday's press conference. Yields, excuse me, not yields, VIX. VIX closed down on the week, daily view. Now I want to point out, let's go back to the weekly chart for a moment. We did hold support. All right, that's critical to remember. Daily view. All right, daily view, continuation move lower. Stokes are hooking up. You know, this nasty sell-off here, you know, I take a look at it and I have to, the word unsustainable comes to mind. Here's your downtrend channel. We're going to watch this very closely. Let's see how we close out the day. 30-minute chart. Pretty weak. Dow Transports. They held the breakout. They did a retest. We closed just shy of resistance. Daily view. A nice move up higher. Strong day today. Volume was not good. Volume even rolled in lighter than yesterday's volume. You know, yesterday the transport showed relative strength, but that volume is concerning. Dow Jones Industrial Average closed down on the week 1.40%. We held a breakout point. So, you know, we could say whatever we want about the dollar this yields that, Jay Powell, the other thing. The fact of the matter is the Dow Jones broke out last week. This week we put in a retest of the breakout point. That breakout is still valid. It still has life. You know, is it a little bit suspect? Sure, it is a little bit suspect. Might we break down to new weekly lower lows? Sure, but we'll worry about that when it happens. Right now, it appears as though they're trying to lift this market up higher. Volume to the downside was heavy. Daily view, a reversal bar. I mentioned last night, my guess was after this Doji Star formation that we would rally today. We got the rally. Does it continue? I don't know. I'm very skeptical, in particular of the Qs. Not so much the Dow Jones, but definitely the Qs. S&P 500 weekly chart down over 3.25%. Notice how the S&P 500 is dramatically underperforming the Dow Jones. So we had broken out last week. This week, a breakout point failure. They need a gap up next week. Volume heavy to the downside. Daily view. An up day, respectable. I mean, okay. Volume, meh. It was okay. It was average. Stokes are weak and getting weaker. Qs, weekly view. Down, think about this. Dow Jones down 1.4%. S&P's down 3.26%. Q's down 5.88% on the week. Bear flag setup broken. Might we put in a higher low and then proceed higher? Maybe, but it ain't looking good. Volume to the downside heavy. Stokes trading down below the 50 mark. We know what happens. Rallies fade. That's what happened today. It faded, but yet we were able to rally back. Do we have a breakout point failure here? No, we do not. The breakout is intact. Stokes is still declining, though. Again, rallies tend to fade. The banks broke out last week, retest this week, very similar to the Dow Jones. I think we have sector rotation that's going on out there. Daily view, they closed up on the day, pretty respectable. They had broken down yesterday, rallied back today. Volume was a bit light. Technology down 6.64%, clearly underperforming the Qs. Bear flag setup, broken. Volume light though. Daily view. Stokes trading down below 50. Rallies tend to fade. An update today. I'm not trusting this. I'm just not doing it. Volume was good. Let's see the quality of the close. 30-minute chart. Pretty good. Semis. They were only down a little over 0.75% on the week. Big rally back today. Let's go to the daily chart. That's got to look pretty. And it is pretty. We had broken down. Now we have broken back out again. Volume light. RSI back above 50. Stokes may want to flatten out, hook back up. That would be bullish. LABU down over 13% on the week. It held support. We remain in the triangle formation. Daily view. I had no appetite to go adding more this week. We held support. Big volume today. Stokes are declining. It's a watch. Staples, retest of the breakout point, but still down over 1.75%. Daily chart. Good day. Volume about average. Consumer discretionary names Horrible week. Really, really bad. Down 5%. And I say this is a bad week, and you may be saying, the Qs are really bad. I mean, yeah, it was bad, but when you adjust for the volatility traditionally of these names, I mean, discretionary names are not extremely volatile a lot, but the fact that they traded down not much less than the Qs is really concerning. I think we could break here and we go lower. This chart reminds me of Apple. Daily chart held support. Emerging markets, daily view. This is EDC, strong day today. This got down to $20. We haven't been watching this. China, it was all about China. I was watching Yang earlier. That's the bear ETF on China. That finally rallied today, but China's a mess. Energy, strong week. Yesterday, let's go to the daily chart. Yesterday, we had recaptured support. We remain in a situation where we have topping action. Volume, strong. Folks, a couple of the charts I went over looked wonky, so I had to actually go back, refresh them, and sure enough, a couple of these updated after hours. So if by chance there's a chart that I went over that looks different from your closing price action on a weekly time frame, my apologies. I think it started with West Texas Intermediate Crude, so I'm beginning there and working forward. I noticed it on the gold chart, which showed that we were down on the week, and yet we actually closed up on the week, which makes sense. All right, so let's go back to oil. So oil had a major breakout this week, folks. Now, this is a problem for the Federal Reserve. Now, the market rallied today on what they perceive to be bad news. Good. But what else is out there that could cause the Federal Reserve to stay the course? If you see oil prices moving up dramatically as they did today, why? SPR, Strategic Petroleum Reserve, tapped out. So that wet blanket the president threw over oil prices, that's done. It's evaporated. So big move here, up 5.33% on the week. Volume light, daily view, up 5% on the day. Huge, huge move here. If we begin to break out above 93.64, close there, the market's going to take notice of this, and it's not going to be in a good way. Gasoline prices, weekly view. Big move up higher, up nearly 6.75% daily view. There's money moving in here, clear. Money's moving in. Gold. Bullish key reversal bar. It looks as though the bottom is here. We've stopped going down. Last night, I was not bullish. In fact, quite bearish. But today, gold bugs, they priced in that bad news this morning. So let's see if we get a retest this coming week. Volume was good, really, really good. Indicators look strong. So it looks like the sell-off in gold is just about over. Daily view, strong chart. RSI back above 50, Stokes moving up above 50. We're on the verge of a breakout here. Gold looking very, very strong. Big volume today. Lots of money flow going into gold. Central banks are buying it. Trader Isaac mentioned it last night on Thursday Night Stock Charts Live, the article from Zero Hedge. GDXJ weekly chart. Big bullish key reversal bar. We'll take this all day long. Daily view. First off, how is volume? Volume awesome. Daily view, great breakout, daily time frame. There you go. Very good stuff. Nugget, weekly view. We're up a little over a half percentage point here, but what a volatile week. No breakout yet on the weekly time frame, but clearly a bullish reversal bar, and I think that you can call this a higher low. Daily chart. Huge breakout today. There was no downticks today at all. No downticks. Massive volume. This is the largest volume bar since March to the upside. Silver up over 18%, nearly 18.25%. Beautiful price action here. Great volume. Daily view. Awesome RSI. Awesome breakout. Awesome volume. Love it. The silver miners weekly chart. We broke out. Closing just shy of 10. Daily view. Really nice breakout. This is a continuation breakout. We actually broke out of this bull flag setup a few weeks ago. And we've been consolidating, and now we are game on to the upside. Continuation move higher. Gold money weekly chart. An up week, not a great week, nothing to get excited about. Uranium down 2%, consolidating. Stokes hooking up. I question whether or not they were going to do this, flatten out below 50 and then hook up, and it appears as though that's what they're doing. Boil, monster week here. We're up nearly 23%, and today alone, a huge move, up nearly 17.5% on the session. Volume, awesome. Loving the setup. Netflix, I was tempted to roll down our call side strike to 340 from 360. I said no. Reason, this. I'm worried about, this would be now our third roll down of the call side. We've had a nasty sell-off, and I'm worried about today's price action. Are we filling the gap, which opened up post-earning? We could be. Now, if I roll down to 320, and this is a filling of the gap, and we begin to move back higher, well, I put my head into a bear trap. So I decided, you know what? Yes, my deltas are off dramatically, but using technical analysis, it appears as though we may be bottoming out here. Let's take a cautious approach. Let's watch and wait, see if we break down below let's call it 251. If we do break down below that mark, we could always roll down the calls more aggressively. But right now, I think it's wise just to wait, keep our strikes wide. And I'll tell you, if they rally the shares, that would be awesome. The implied volatility on the options would get drained out. We'd be sitting with we already have realized profits on the call side. Then we'd be sitting with unrealized profits on the trade itself, and we could close this out within, ideally, the next couple of weeks and then reestablish. So Netflix, Lockheed Martin, a down week, pretty close to a doji star formation. Definitely, I don't care if it's a doji star or not a doji star. This candlestick is saying we don't know which way to go. There's a tug of war between bulls and bears. Long story short, what I wanted to see on the day was a close below 480. We didn't get it. We saw buying into the close. How is volume? Volume to the downside, light, daily view. So we broke the lower band of what I'm calling this is a bull flag setup, and we retested one support level, closed above another. So the bull flag setup, the bull flag setup is still intact. I wanted to see at a bare minimum close below 480. I didn't have high standards, but still those low standards were not fulfilled. Volume to the downside heavy, but a lot of that was buying, as noted by the 30-minute chart. I thought that this would be a bear flag setup. Wasn't to be. The markets rallied into the close, therefore money moved into Lockheed Martin. I think if the markets would have sold off into the close, we would have gotten a breakdown here. I think the momentum on Lockheed has now been muted to a certain extent, 4-hour chart. Strong afternoon, no doubt about it. So we'll keep an eye on this very, very closely. All right, let's take a look at Apple. Now, Apple was an accidental short. I got to post the trade alert. My father called me. He was listening to Carter Worth, and he was talking about how he's still long of Apple, wanted to sell it. He had covered calls. And I said, watch and wait. We were trading just above the 134.15 mark. So let's see if the market rallies back. It looks like a short to me, but you don't know if the market's going to rally back. At the time, NASDAQ had just turned negative, and the markets rallied back. The rub is that while Apple rallied back, the weekly chart still looks like a basket case. Let's update this. So I'm looking for a break here on Apple. Volume heavy. Daily view. Stokes trading down below 50. You can see the rally back off the lows. They know you close this thing down below 134.15. You're going to the June lows. If that breaks, that's the market. That could take the entire market down. So volume very strong. So while it's an accidental trade, and what I mean by accidental, I selected the strikes I liked. It's our typical, I think it was an 80-20 delta bear spread, and I put in a very, very low offer, or bid, should say. I'm so used to selling options. And I forgot all about it. And I just wanted to keep it in the pending execution bucket, so that way I could just go in. If at the close, we close down below 134.15. If that would have occurred, I would have upped my bid and gotten executed. I didn't anticipate the big rally back and then them hitting my ridiculously low price. But they did it. So let's see what Monday brings. It's a very small position. Again, two lots, so not a big position. All right, folks. Have an awesome weekend. I'll talk to you soon. Be well.